Welcome to another episode of the Financial Armor Show. My name is Jose Rodriguez, investment advisor for Cooper Financial, and your host for today, alongside my co-host Tony Shore. How's it going?
It's going great, Jose. Thanks for having me on the show. This is going to be a great one, mainly because of our special guest. Jose, I don't know how you did it. I don't think Brad's had this special of a guest on before. This is going to be a good one. I'll let you introduce her in a moment. But I've been great. I've had a busy week. I've had a much better week than the markets have had. I can say that at least. I mean, it doesn't really matter what happened to me during the week. I can always say my week was better than the markets. At least this week, I can say that, right?
Good.
Yeah. So there you go. I've been pretty good. Jose, how have you been doing, though?
I've been great. Trying to get just catching up on work. And this season, the first quarter of the year, it's always just a run. And
Busy,
then,
isn't it?
as you alluded to, the past week has been even busier.
I bet. Well, we have nothing going on. Taxes, weather events, the markets, the tariffs. I don't know why you guys would be busy at Cooper Financial, but I know you guys are always busy at Cooper Financial, and you're taking care of your clients, which is great. Has Brad been treating you okay, Jose? That's my first question.
I'm still here.
Awesome. That's great. No,
So
I know.
it's good. It's really good. Really
Brad,
good. I like
Brad loves you, and he really appreciates you taking control of the show once in a while. That's for
yeah,
sure.
and to this year, I feel like I'm gonna call this year. I'm gonna make an executive decision here. I'm gonna call this year the year of the young whippersnappers, because you're seeing a lot of me lately, and then now we have Lisa here from our Gradient Investments investment analyst. I had the pleasure of meeting her at our Elite Advisor Forum here when in Minnesota, when we got to talk to JP Morgan, Goldman Sachs, and all the big people in Wall Street. And I had a chance to talk with her, and she's brilliant. She works really close with Keith Gangle, which we had on the show before. And she's one of the great upcoming minds here in Gradient Investments. And she also helps manage all the portfolios from our clients.
Yeah, thank you for the great introduction. Now I'm blushing a little bit.
Lisa, tell us your full name and title.
Lisa Schreiber. Now I'm also pronounce it like an American. Lisa Schreiber.
Yeah. How do you pronounce it? Pronounce it in your language.
Lisa Schreiber. Very unmelodic. So actually, you pronounce it a little bit better. So I like it.
It's Austrian.
Yes.
Yes.
Yeah. Yeah. That's awesome. That's awesome. Yeah. So what's your title?
Investment analyst.
Investment analyst. I love it. And you have quite a bit of, you're young, Jose, you're right. I'm the old man here.
Seems to be the trend here.
Brad and I are the old guys, I guess. And it's the up and coming, younger folk that are really helping out. And Jose and Lisa, you're both younger, but Lisa, you have already a lot of experience in the financial industry, don't you?
Yeah. So I moved to the US 3 years ago. It's approaching 3 years. I'm on my third winter. I like to take a little bit credit for that, for Minnesotan winters.
They've been mild.
Yeah, they've been mild, right. Yeah. And I worked for a middle-sized regional bank there. And I come also from the investor side, investment advisor side for investments and insurances. And now I'm more in the background, but still every once in a while being able to talk to our advisors and to clients. So that's really special.
That's great.
Yeah, and Keith really recommended her to join us this time around, because Keith says that she's the funny one of them all. So
I try.
I'm excited.
Oh yeah, she's got the best person. Let's see. Out of course, the bar is low. We're talking about. Let's talk about personalities. We've got Keith Gangle, Tyler Ellegard, and Mike Binger. I'm going to go with Lisa every time if it's personality.
I take that as a compliment.
Obviously,
even though the bar is low, like you said, I take it as a compliment.
Please do. No, they're all great, brilliant minds. All four are brilliant minds. But it's always more fun and a lot more personality when you bring Lisa on. I love that. I do. I really do. So, Jose, where are you and Lisa going to begin? I'm going to turn the show over to you guys and stop interrupting here.
Yes, sure. So we wanted to create a special report today to inform and educate the public, the listeners, and people that are watching on YouTube, uh, of what happened this last week and why they probably have seen probably all the craziness on the news, and it's mainly surrounding tariffs. And here, with the help of Lisa, she can help me create a backdrop and explain what has been happening. Uh, so on April 2nd, that was Liberation Day. Uh, Trump came out with his list of, he calls it reciprocal tariffs, technically, but it's a list of tariffs, and he started it with 10% across the board, right? And it went as high as I think 49% on certain countries, and so it's bottom part, the minimum 10% up to 49%. I think it was Cambodia. I think what I have here. But anything else that really stood out to you on April 2nd, Lisa?
So I think overall, I think now we have the infamous board that he presented, right? That will haunt Wall
Yeah.
Street for years to come, I think.
It will.
Yeah, right. So what we saw obviously is the 10% across the board, right? No matter what country, basically across the board. And what we saw, more personalized tariffs, more on the larger trading partners, or let's see, when you just mentioned it, reciprocal, it was not really reciprocal, right? It was more calculated on the base of who has the most trade deficit with the US, and that was calculated based on the tariff rate. I think overall what happened, investors before that were looking for a little bit more uncertainty and hoping for a little bit more certainty on Liberation Day, that we have more numbers to calculate, more certainty, more, okay, this is where we are going now, and this is where we are heading, and it will all calm down a little bit. That did not happen whatsoever, unfortunately. Yeah, the tariffs overall were worse than investors were expecting, and the market does not like uncertainty, right? And bad news, certainly. So markets reacted very negatively to that, sold off sharply, right? Investors are trying to get any news, any ideas of will there be negotiations, exemptions, right? But overall, what that tells us is that uncertainty will probably be with us for a while to come, even though they're not maybe introduced the way they are shown at the board, but we will probably have some form of uncertainty surrounding those numbers going forward.
Right, and it seems like the negotiations, well, as of today, Monday, April 7th, negotiations are starting. So I guess do you think the outlook or the outcome of these blanket tariffs, and even in some opinions, extreme tariffs, is essentially shooting for the stars and landing at the moon kind of thing? You know, having like an anchor and then negotiating from there.
So I think that's the consensus, right? I mean, overall, when we look how the tariffs got introduced last Wednesday, that would put the effective tariff rate in the US to over 20%, right? To put it a little bit more into perspective, because that might not tell a whole lot, we are starting from 2%. So 2 to 20% overnight, basically. And that is as high as it hasn't happened basically in 100 years. So everyone that is alive today never faced such high effective tariff rates, right? And this is another way to look at it, why the market reacted the way it reacted, right? Because when a 100-year precedent gets changed overnight, yeah, investors can handle that very, very badly, right? And the next thing is how it actually, those numbers, how they can actually be computed, what implications that has for the economy. Everyone is struggling, economists, even the Fed, right? Nobody knows exactly how this will flow into. So the consensus is basically that these numbers are start of some form of negotiations, right? And to remember back what the actual goal is to start all of that is that the president wants to bring the trade deficit a little bit more into balance, right? That the US is a consuming economy. We consume around 30% of all goods in the world, but we only export 15% around that, right? So bring that a little bit more into balance, export more, have less trade deficit with other countries. That's the ultimate goal, right? So I think that's some part of starting of negotiations. Whether other countries are trying to reduce the deficit or bringing down their tariffs to make trade more fair, we will look and we will see that. But I think even though the White House denied it today, that negotiations happen anytime soon, I think down the road there might be some confessions from either or side. Yes.
Yeah.
Right. There has to be concessions.
Mhm.
I mean, the goal, one of his goal is to level out the playing field as far as trade
Mhm.
goes, but also one of his goals is to bring manufacturing back
Mhm.
to the United States. But not everything could be made by the United States. So there's definitely going to be some manufacturing by I'm assuming. I mean, we know definitely with the semiconductor industry and possibly some auto manufacturing coming back, and which overall that would be a good thing because these are high. You would need highly educated people
Mhm.
to do these kinds of jobs, which bring a lot of money to the United States. What we don't want, and correct me if I'm wrong, is bringing manufacturing that is low margin, creating gadgets. We want the high margin, highly educated, high revenue manufacturing jobs to be brought back.
Absolutely, that's the point, right? That's another way why Trump started this, right? To bring back important industries back to the U.S. to manufacture here. The thing, though, is here this is not easy, right? This is not easy. We do not have all the factories yet there, so we need to build those factories. This does not happen overnight. This takes years and years, unfortunately, right? Until these are ready to roll, basically. With the raw materials, we import a lot of those raw materials for those factories, right? So that
Mhm.
makes it maybe a little bit more expensive down the road. Then, like you said, right, we need profit, like high margin businesses back in the US. Not every product and not every industry. Also, what we see is the idea is to bring back jobs to the US, and that's more likely highly skilled people that we need for those
Right.
jobs. Maybe less than what we saw before the US kind of outsourced manufacturing, right? Well, be kind of thousands of people that we needed to build cars 30 years ago. With all the technology and all of that, we need a lot less, but a lot more highly skilled people to do that kind of jobs, right? So again, like this is um, um, an idea in itself, but it takes time, right? And
Mhm.
it takes years for that to really being able to play out.
Right. And and I guess going back to the effect that these tariffs have had on the overall market, how
Mhm.
much of this reaction from the market is just a reaction, and how much of it is an actually economic reaction, tangible?
Mhm, mhm. So what we saw in mine, I mean, like I said, right, the market does not like news that it was not expecting or
Mhm.
worse than expected news. And
Right.
that, what we saw very much over the last couple of days, and especially also today with big swings, and we haven't seen those swings since March 2020, and that was COVID, right? That was a whole nother different story,
Yeah.
but
Mhm.
equally the volatility that we saw this time. I think, like you said, right, what was kind of reaction and what is really tangible at the moment. I mean, if the real effects of tariffs haven't hit yet, right? So we do not really see price increases yet, or a whole lot of different trade flows, right? That takes time as well, and we will get a little bit more data points over the next coming weeks and quarters. So there is certainly a little bit of anticipation and a lot of speculation, right? What businesses will be most affected, right? And we saw that last week on Thursday, especially. Not everything was red, right? There were some pockets that went
Yeah.
that kind of worked better. For example, more the sectors that are called defensive, right? Consumer staples, your typical retailers that you kind
Yep.
of where you buy no matter
Walmart.
Walmart, where you
Yeah.
buy no matter what. Other
Yep.
retailers, for example, like Apple, for example, iPhone manufacturer,
Yeah.
a lot of supply chain and a lot of manufacturing in China and Taiwan, right?
Entirely.
They
Yeah.
got hit very hard. Other retailers as well. So there were some pockets. So investors tried to figure out who is hit the hardest and who could be hit the hardest by supply chain. So there was a little bit of that already. But even though the actual numbers of tariffs do not yet flow into price increases or whatsoever, we see already some implications. And when we look at businesses, for example, right? When you are a company trying to figure out how to change and how to deal with that, that's pretty hard at the moment because it's so uncertain. So you might hold off of investments and of huge capital expenditures at the moment, just to figure out, okay, let's wait and see, and then we look where we invest and kind of where we put our capital to, right? They might maybe hold off of hiring because they do not know what implications that will have, right?
Yep.
And on the other side, for example, consumers, we also see very real impacts already, right? Consumers are getting nervous, do not know what that means, maybe holding off of their spending. That hurt businesses with their revenues and sales as well. Again, we have still a lot of speculation, still a lot of uncertainty, because we do not know if all of that goes into effect, like pledged, if how long it will stay. But there are some thinkings what kind of implications that will have for the economy and for businesses going forward.
Yeah,
Yeah,
it'll be
right.
interesting to see how it plays out. I mean,
Mhm.
we're already seeing this volatility, and then we'll see if it starts affecting inflation or consumer spending. I mean,
Mhm.
our markets and our companies in the markets are driven by
Consumer spending,
consumer
yeah. Mhm.
spending. And so that's what we are as consumers, and we'll see how that plays out, won't we?
Right, right. And right now the markets are really just pricing in worst case scenario, it seems like.
Right.
The thing I do expect, like I said, this is an anchor. This is the worst that probably could be as far as the tariffs go. And then it's going to be dialed back as negotiations happen. But the markets are just assuming they're going to stay, all those tariffs are going to stay forever.
Mhm.
Right.
Right.
Yeah.
So, and I want to read on some quotes that I saw because unfortunately I've been spending too much time on Fox Business and CNBC, just to try to get an idea of what people are saying out there.
Yeah.
I have my own, analysis of what's going on, and Mike Wilson, which is someone that you always listen to, so it's the chief investment officer of Morgan Stanley. He said in the next 6, 9, 12 months, it's probably going to be a rough ride. But he sees it more as a detox because we've had a really good economy for the last couple of years. Would you agree with that? Or what's your take on what he said?
I mean, I agree totally with that. I mean, the U.S. economy is the strongest one in the world, right? Came out of COVID. I think 100% of economists at some point the last 2-3 years said, "Oh, we will head into a recession." 100%. That hasn't happened, right? So
Right.
Right.
that shows
Then we had
kind
two
of
of the biggest years in
ever,
the
like, yeah,
economy, and stock market did
yep,
really well for a couple of
absolutely.
years.
So the U.S. economy surprises again and again over the last couple of years. We had great market return years, plus 20% back to back. That hasn't happened since the late 70s. So that is really good, and the economy proves resilient, right? And
Mhm.
and we at GI, we kind of have that thinking coming into the year of 2025, and without it, bring an umbrella, right? Because it
Mhm.
might be a little bit a bumpier ride ahead. We had a new administration coming in. We came from such great years. In the last 2 years, economy is great, that we will probably face some headwinds in some form. And going back to his statement that we will probably face some headwinds and some detox in the next couple of months, I think that is probably the majority of that, I think, is because of the uncertainty that we are seeing, right?
Okay.
And so I agree with that we will probably have to deal with some form and level of uncertainty for the next near future going forward. Yeah.
Good. Also, Jason Foreman, I think that's how you pronounce his name, Harvard economics professor. He believes that the floor here is a 10% tariff across the board. He believes that that's going to be, that everything's going to get worked out and
Mhm.
probably even getting rid of majority of these tariffs. But the minimum is going to still stick with 10%. How real do you think that is?
So I give it my best uneducated, educated guess here, right? Because
Educated guess, yeah.
no one knows, right? I mean,
Right.
No.
that is my best shot that I give to this statement. Um, I think the consensus is, to his point, that it's some way, shape, or form it needs to be worked out, because the numbers are just high for some of those countries, right? So we need some concession for both, from both sides, and that is basically the start of a negotiation, maybe for for some countries more than for others. So I think there will be some change down the road, yes. His statement about the 10% base tariff line, that stays, I can see where he's coming from with that. And we saw that in the last Trump administration, where he introduced tariffs to China, right? What did China do? They brought a lot of production to Mexico and imported goods and produced it there, and imported goods to the US from Mexico, because they had less tariffs or no tariffs, right? And kind of dodged their tariffs rates like that a little bit, and just going to other countries. So I think I see where he's coming from with that kind of it's a little bit harder for other countries to dodge their tariff rates. Again, nobody knows. My best educated guess is there is maybe some merit with that, that those 10% tariffs on all other countries got introduced in the first place, to being able to, for countries to not dodge that, to really work it out, basically.
Right. That is, I would agree with you on that rationale as well, because as what we saw happen after the Trump's first administration, that put tariffs on China, and then China just went through Mexico. You saw the change of who was the biggest, I guess, exporter to the U.S. Was replaced by China to Mexico.
Yeah, they just flipped.
They just flipped.
Yep.
So, given all the stuff that we talked about and all the volatility, what would you say is investors should be looking at as far as investments go, as far as allocation wise or anything like that?
So first of all, I think there's a lot of uncertainty, right? And it's frightening also for people like us who do it all day, every day, right? I mean, that's kind of what we see in the market, and it's hurtful when you look at your investments and that you're in the red and they're down. What will help, and it might sound silly, but kind of take a deep breath and zoom out a little bit and look at your overall financial plan, right? And this is exactly the reasons why you have a financial plan for times like this, right? That you know exactly this is your goals, this is my plan, and it is exactly doing what it's supposed to do, even in times like that. And when we take a step back and seeing, hey, there is some form of correction every year, right? Even in the last 2 years, I said it, like we had 26%, 25% last year, 2 such great years, and we saw around 10% corrections in both years.
Yep.
So even if in great years we have some form of correction during the year and some form of volatility and uncertainty, but what I wanted to say is here, hey, this is a great time maybe to reassess your risk level, right? Are you comfortable with your risk level that you are in right now, right? Or would you prefer a little bit more conservative or a little bit more aggressive? So times like this is a great time to do that, because risk levels changes over your life and with different situations. Also, what we see, and I think is interesting, when we look at the year-to-date returns, that the US market is down year to date, but other areas work, right? For example, international developed, emerging markets, gold. So there are pockets out there that work. Not everything is down, right? And I think that is a fantastic evidence of diversification, right? And over the last 2 years, we there was not really a need to think a lot about that, because there was a lot of US exceptionalism, right? There was no better place to be than in the US, right? Now this changed a little bit, and now we see again, hey, there is value in diversification and not laying all your eggs into one nest. And like I said earlier, we called 2025 and creating investments the year of bring an umbrella.
Bring an umbrella,
right? Which means it does not need to mean bad weather or bad markets the whole year. I mean, the last week it poured, basically, but it means you're prepared in case it does, right? And what we also say is, hey, protect and participate. And like I said earlier, protection, that's a form of reassess risk level, maybe rebalance your portfolio, right? With 2 years of such great equity outperformance, you might bring back your your allocation again to your preferred risk levels, right? Rebalance a little bit. Maybe also think of protection, but still participation. Structured notes is a
Right.
good form of that. You're doing that, right, for your clients, where
Yeah.
you can protect to the downside with different levels,
Like
but
the
still
buffered index
the buffered index
portfolio.
portfolios, but
Yeah.
still participate to the upside. So all of that is a great opportunities to protect, but still participate and still staying the course. Because I mean, history suggests over and over again, people who are staying in the game are winning at the end, even
Right.
when we're looking and moving through uncertain and times like this, where it's not easy to take a look at your portfolio. I understand that.
100%. Well, thank you so much, Lisa. And something I wanted to add to the what you said is
Mhm.
the best way for somebody to really understand the risk and be invested in a certain manner that you are participating but protected if something happens is by having a financial planner that has access
Absolutely.
to people like yourself, grading investments, and make sure that actually gets to know the client and gets to know the listener, people that are listening to us. Make sure that we are getting to know you so we understand your actual risk, because that's important. And
Mhm.
that's why right now I'm not necessarily getting that many phone calls of people really freaking out, because one, we understand their risk. Second of all, we invest them properly with structured notes, buffered outcomes, ETF, and things like that. So when the market goes down, they don't lose 15, the whole percent that went down. They only lose a small amount, and when it comes back up, they get full participation.
Mhm, mhm. No, absolutely. I think it's a great note to kind of summarize what you just said, right? Clients and people do not have to do it alone. And I know it's complicated. It can be a lot, right? It's you hear a lot of headlines, and sometimes the media is exaggerating a little bit even more than what it is.
Tell me about
Oh
it.
yeah,
Right? I think
the sky is falling.
Yeah.
absolutely, you agree on a market's in turmoil every time. You know, media is latching on that, and
Yeah.
when something like that happens. So I think it's important to have like a trusted buddy on your side, like a co-pilot, like you, Jose, right? Who can help and kind of help clients stay the course and help investors stay the course and really feeling safe, so they can so they can sleep well at night and still being know that everything is taken care of and everything is working towards their financial goal. So
Yeah.
it's
Awesome.
magnificent.
Yeah, well, I like I said, the last conversations that I have had with clients have been very pleasant, given the times, given the circumstances. So I'm glad that we're able to do that for our clients with your help, over in the grading investment side. And but I want to thank you for joining us today.
Thank you for
Uh,
having me.
yeah, if anybody wants to, that is a client, by the way, if anybody wants to talk to Lisa, that could be arranged as well. And she's very bright. And if anybody wants to know anything about the specific portfolios, they can go directly to any of the portfolio managers that we have. But yeah, Tony, anything you would like to add?
No, I think it's been a great show and great having Lisa on the show. A lot of great information. We covered a lot. What I got out of it is don't panic and work with a financial professional, someone like yourself, Jose, you and Brad and the staff there at Cooper Financial. So if our listeners out there and viewers want to get a hold of you to set up that no charge, no obligation consultation, how do they do that?
They can give us a call at 888-390-5277, or go on the website financialarmorshow.com and ask for a consultation there.
All right. And for your clients that you're currently working with and have been working with, if they want to touch base with one of the portfolio managers, Lisa, or someone at Gradient Investments, they can set up a consultation, no cost, come in, and you and Brad will hook them up directly to talk about their portfolio and where they're at. Correct?
Of course.
That's awesome. Well, great show today. We covered a lot. There's a lot happening. We'll have to touch base here in a couple of weeks to see where we're at and do a recap, right?
Yes, of course.
All right. Well, that does it for today's episode of the Financial Armor Show with our host, Jose Rodriguez.